Let's bring in our first guest. This is Jeff Blazek. He is the co-CIO multi-asset of Neuberger Berman, making his debut here on Taking Stock. My man, the best to you for the holidays, and thank you for being here today.
Happy holidays. Glad to be here on a fresh all-time high, too.
You're not kidding. So we got the big board here at the New York Stock Exchange. I love looking up at this thing. I wasn't expecting all-time highs today, given we had some negative price action for the S&P today. What's been top of your mind for you? Lower volume overall, but what are you tracking these days?
Well, the lower volume, we expect that, but it's been an interesting year. It's hard to believe how much we've come off those lows. We were near a bear market post-Liberation Day, a major rally. We're getting close to 20% gains on the S&P. And in our view, we think it's full speed ahead. We think it's going to remain quite robust in terms of investor gains in 2026.
Do you have either a price target for the S&P 500 for this time next year, or your general expectations for how you see the new year going?
Yeah, we don't necessarily maintain a target, but what I'll tell you is the current run rate of earnings is about 10 to 12% for the U.S. stocks, and we inform that, let's say multiples are stable, that would suggest low double-digit returns are not out of the question for the S&P 500.
Yeah, tomorrow, of course, is Christmas Eve. It kicks off one of our favorite calendar-based indicators, the so-called Santa Claus rally for the year, the final 5 trading days of the year, plus the first 2 of the new year. What are your expectations here, again, given some of the seasonality concerns and pressures for investors?
Yeah, we see no reason for those seasonal patterns not to persist. And by the way, when we look into the first quarter of 2026, we're very excited about the fiscal stimulus we're going to see from the OBBBA. So the average American taxpayer, based on our calculations, is going to get about $800 to $1,000 per household by virtue of higher deductions and other benefits from the tax law. So that's going to be a very big fiscal impulse to start the year next year.
Yeah, Jeff, I don't know how closely you followed, but we did get a far hotter than expected GDP print earlier this morning. Reliable government data, been kind of tough to come by given how long the government shutdown was, but 4.3%, that's a lot hotter cover off the ball than people had been expecting.
Yeah, our team is looking at that closely, but you're right, we should take this with a major grain of salt. The data, the inflation numbers in particular, had a lot of errors and omissions that we have to factor in. But I think it speaks to the fact that nominal GDP, real GDP is on a solid trend now that the worst of the tariff noise is behind us.
What do you do if you are a voting official at the FOMC? I know you're not, but we will have a few new names the regional Fed heads will be rotating through starting with January's meeting. Reliable data has been tough to come by, but they're a data-dependent Fed. What's your outlook in terms of monetary policy moving forward?
Well, I think be data-dependent. Look at the long-term trend, the balance between employment and prices, and stay resilient in terms of that message, and the North Star is the way I'd put it. So right now we expect one more cut to come based on the data we see, but certainly if we have a material contraction in employment, the Fed has to factor that in and they can course adjust accordingly.
Any other big catalysts or potential market movers on your radar here, Jeff, that you think we should be paying a little bit more attention to in these final days of 2025?
Well, I think this is the longest I've gone in any conversation where we didn't talk about the elephant in the room, which is artificial intelligence. And that is going to cause a lot of winners and losers, macro and micro. We're following that closely, but in 2026, we think it's going to create some divergences. It'll be less about the tech play, a lot of other sectors that'll be the beneficiaries, and in some cases the losers from this mega trend.
Jeff Blazek is the co-CIO multi-asset of Neuberger Berman. All the best to you for the Christmas holiday, the new year, so much beyond that. Best to you and your family. Thanks for joining us.
Happy holidays. Thank you very much.
Happy holidays to you. Thanks a lot for joining us.
Appreciate it.